here's what I have been doing. I left the lines on, but what I was looking at last night is this is the, if you go to the day, if you're trying to get a feel for the run up, the run down, did it fail? Is it coming back to touch? So you're just trying to see where the market has been and if there's some sort of natural drop or natural pop to the top. A lot of times I will throw a fib on the previous down run to see if the market had respected these lines on the way up. And so it respected. So that gives you one inclination that if you put a fib on, that you're close to the right spot. Then when you go to the lower time frame, I'll clear this. So you go to the 4 hour and see if there is another fib
Can you
that
clear your
jumps out at
lines
you.
first and like show how you would start from scratch?
Yeah, I can. Not a big deal. So I purposely left the lines on to show, but it can be recreated. So go ahead and grab your, there we go. Yeah, that's
All
for you.
right.
That's
Wait,
for
did you
you,
just
Dave.
okay. Hey,
Dull.
hey Pete, can you see my video?
No, I can't.
Use the Duke. Use the Duke doll.
Oh, thanks, Pete. That helped a lot. That's a lot better.
You bet.
Yeah,
All right.
double here.
You try to find the previous down leg, and then we'll start there, come down to the 4 hour. And here's another down leg. So the reason I'm putting shorter fibs on, again, is to see if the market is respecting these on the way up, and they are. So now on the 1 hour, if I pull back just a little, pull back just a little bit. I'll go back to the 4, because here's what I saw, which gave me the prediction to go long in my setup. Market came down, came up, failed, and turned back up. So I was looking to play the top last night. So if we go down to the 1 hour, I will put my trade history on. Okay, so this is the 1 hour. So right here was my overnight setup. So last night, I'm going to pull these back. Last night on the 1 hour, I saw that. Let me do that one more time. Okay, so I'm gonna put a line here because this is when I open up the market right there. So I fibbed this line. So this is fibs, the larger time frame. This blue line was the 1.10, which Dave was calling out as the magnet. Right here, it was teetering back and forth on that line. So if I zoom in here, these are the lines that I was playing last night. So my first entry was right there on that line. And what I do then is I will place all the lines on the fibs all the way down until I come across a KPI. So sometimes the market is either ready to bounce at the 50 or it's ready to bounce at the 618. And this line is that 786 fib that doesn't show up. And then here's the 100% fib. So if the market has enough, so this is 50 pips to the bottom, okay? So last night, because we were at the top of this fib, I put my first position on here, second position, third position, fourth, fifth, and then right here is, if it breaks this, then it's going this way. So I got buy, and that equals one lot. And I then put a sell hedge right here, a sell
Are you
limit
putting
or a
limit
sell
trades on?
Yeah, these are buy limits. Okay, so now I've got
And when you
Let me
say
say
one
one.
lot, is that
Let
total?
me just say one thing
Hold
about
on one
that
sec.
though.
Hold on one sec. These sizes are 0.25. Okay, Dave, go.
you got to be careful with the prop firm that you trade in, because sometimes if you enter a hedge, it'll kick you out of that prop firm. So you got to be careful. Just know that. Sometimes they don't care. Sometimes they care. Just know what prop firm you're in, right?
Yeah,
That's the
and
only
that's
thing I'll say
interesting.
about
I
it.
haven't, which prop firm are you talking about? Because there's been a couple times when I've been in the hedge and it hasn't kicked me out.
Keep talking and I'll look it up.
Okay,
But I
so
know that
going back to the top here, I've got a $25,000 account. The balance is close to 26,000. So I've got 0.25, 0.25, 0.25, 0.25. My KPI is if price breaks the 618 coming down, I'm then going to match the hedge and put a sell on. So worst case scenario, if I wake up and the market dropped 50 pips and price is down here, at least I can manage this loss. And Anubis is there's a way to calculate it. I've stopped calculating it because I know that once it gets down here, it's somewhere between -1, -1.5, maybe 0.7%. And so if I wake up and it's down here, we have more KPI, I'm sorry, more supports and resistance that we can play off of and work yourself out of. In December, what I found is the price a lot of times starts here at night and then comes back, and in the morning it's right back where it started. So it hasn't taken off one way or the other.
So question, why do you put on a sell hedge and not just put a stop loss?
Okay, can someone explain to Duke what you guys heard me say?
It's a hedge. So he
The hedge.
starts making money when it goes down.
Yeah, but he's
The
matching.
Losses.
He's
So-
did
matching
match.
though.
It's one lot. He puts on one lot sell to make up for the 4 quarters that he's taking a loss on.
I know. I'm saying
Okay,
that's not
so
a,
let me answer
that's
that,
not
Duke,
how
because
I hedge.
well, that's awesome. I'm glad we hedge differently because I would love to hear how you hedge. So peace of mind. That's why I do it right there. Peace of mind. So I can go to bed and I can know that let me finish the thought process after this too, but peace of mind is if the market drops and it blew through and it didn't give me a pullback and I didn't get gold and didn't get out, then I can manage the trade down here and I don't wake up to a -2%, -3%, whatever loss. So peace of mind. I go to bed and I know that if I wake up, I either have work to do if price is down here, but more often than not, here's what I'm finding, because I've had this happen in December. You get into a position here, it drops, gets into another position, it drops again, gets into another position, and my bias was up. It comes back, and as it came back, that's where goal was. So because you click the goal at 0.25 and you click the active button and then you click the no box, it's essentially acts as a trailing stop. So when I put a buy on, goal is here. If it drops, now goal is here. If it drops again, now goal is here. And if price comes up, now it's at goal. If it turns around, and I've had this happen where I wake up in the morning and price is here, but it got me out at goal. And that's all I really care about. Okay. So if it doesn't give you one back, now, because again, like down here, I'm in one lot, goal is here. And this is essentially, if this thing pops, that's all I needed. And I don't care if it keeps going, because eventually from here to here, I'm waking up. So if you're going to bed your time somewhere between 10 o'clock, right? 10 p.m., 11 p.m., whatever. If you're waking up between 5 and 6 o'clock, all of this happens. And you're waking up to see where you're at. So the reason that I'm setting that hedge is so I'm not just being right or being wrong. The hedge allows for me to manage the position out. And ideally what you would do is you would leave that on, and at the next larger fib or larger support, you would take the sell off and then you would manage your buys. So you would, the second you start entering buys, your break-even line goes here, all the way down here, and now you're just back to the 3 and 50 method. So is it a perfect scenario?
That makes more
No.
sense now.
Yeah. So is it a perfect scenario? No. But it's not just a put buy and put a sell and you just cross your fingers. So that's the entire premise of what I've been doing. The new thing for me is this was an outside range, and so I didn't put any buy builds into this. Normally, what happens is, let's say that we're over here and we have data over here, and data means previous fibs. So if I add a buy right here, it gets me in here, price goes this way, and then it comes this way where my next buy is, and this is a buy limit, like out ahead of time, or a buy limit here. What happens is you get into your first trade and goal line is here. It comes down, gets into the second trade, goal line comes here. When it comes back and comes this way, the second it gets into here and you're in profit, goal skips down to here, thanks to a novice. So I've seen it where goal will hopscotch, and now suddenly I'm in an active goal, and if price comes back, it knocks us out, no harm, no foul. If it keeps going, then that is the potential for waking up with a friend of mine, 8% times 7 accounts, 60% or whatever my friend did that one time. So that is what I've been doing.
Now we know he's lying because he doesn't have friends.
Hey Pete,
Yeah.
there's another good reason for hedging for your peace of mind. I don't know, a lot of people on here may not have been trading them, but I was. If anybody remembers when the Swiss bank depegged from their floor currency, it wiped out, literally, it wiped out not just traders, but entire companies. And we live in a really uncertain world. You've got Ukraine, you've got a lot of political instability. We've seen Japanese earthquakes, tsunamis, nuclear power plants blowing up in Japan. I mean, we trade in the US and there's a lot that can happen overnight. And I know a lot of people who had stops in, even when that whole Swiss depegging thing happened, their stop got filled, but like a couple hundred pips lower than where they had it, so having that hedge on at least lets you wake up in the morning and manage out of it instead of waking up and like, oh, I thought I was only going to be down 2% because of my stop loss, but yikes, I'm down 15%, or whatever.
And we could always click this button as well to keep the max risk on. Brandon asked me about it last night, and I did a screenshot for my setup because again, I got in right here, and because price didn't come down, I literally woke up at goal, but I only had my first trade on because it went up like 20 or 30 or 40 pips or something. And so in this scenario, it didn't pull back. Remember how Dave has said in the past, I want price to go against me so I can build a great position. So in this instance, it didn't pull back to my next layer. But Brandon had asked, like, wow, who taught you that? Where'd you come up with that? Or where'd you see that? And so there was one company, one of these trading groups, and the guy was hedging. And so he was hedging, but again, I'm just going to be blunt and say that his education wasn't as good as ours. I started to figure out, or I thought to myself, wait a second, why don't I build into the position until the KPI? And after the KPI, lock the account in a hedge because obviously the position is wrong. So that was my first thought daydreaming as I saw him hedging, because what they would do is he would hedge at the break of the support or break of the resistance. They had much larger accounts and they were doing 1 hour charts, so they weren't scalping. But he would then keep it locked until the next support and resistance, which makes sense. He would take it off, put a new trade on to head up, and if it broke again, then he would just re-hedge and he would do those things. But so that got me thinking about, hey, how could I protect my account so when I go to bed at night, I don't have to wake up in the morning worried, what if I'm wrong? But the real beauty of this was the second that Khaled had put this the daily goal line, I realized that 2 or 3 times price did go against us, but not until it pulled back one price cycle, got my goal, and then I don't care what the market does after that. So having that goal line and then having that ability to build into trades and not care, because if we didn't have this, I've been with other groups like a year and a half, 2 years ago, where they're like, "Hey, play the fib," but what happened was price came up in the middle of the night, like, we're at 1%, but there was no vehicle to get out, and it retraced all the way back, and you lose, and you're like, "Well, that was dumb." And their response is, "Well, you'll get up at 3 a.m." Like, well, that's not sustainable. So for me, using our information on the KPI is huge. And like I said, you saw how I pull the fibs, and I use those as the objective lines to get in. And there was one night,
Or
either
action
last
points.
week, they're action points. Yeah, clearly they're action points. So I think it was one time last week, it was just a bunch of mashed potatoes, and I was like, you know what? Nope, just not trading. And there was just nothing there, and that's okay. And so that is my night trade setup.
So, just so you know, funding pips is the one that doesn't allow hedging. It's a
Gotcha.
banned strategy. I was thinking about them, and FTMO says that they allow hedging, but their hedging is different. Their hedging is not in the same pair. If you're going to take a trade, you take the opposite direction on a different pair, unless you're in a swing account. So just be careful that you understand when you understand what companies you can do it with and which ones you can't.
Now, do they identify, their definition of hedging, is that where you can't have a buy and a sell on in the same pair, regardless of position size?
That's most people's definition, yeah, of hedging.
Okay.
So,
Right.
but if you want to get specifics, reach out to them. I personally don't hedge. This is a great strategy, and I'm gonna try it. But I personally don't. Just well, it's in a whole other thing.
Well, you know,
I think I shared with you guys. I used to hedge all the time, and then Sean, my
the
mentor.
blade trade.
Well, I didn't put that on. I put a pending order on, right, on the belay trade. And I used to do that all the time. I used to do other things, hedging. And all Sean said to me, he was very cryptic when he taught me, but all he said to me was, "There's a reason why we don't hedge." That's all I said.
Yeah.
And I'm like, and I had to go figure out that reason, right?
And you found out.
And I found out, right? So, but it's all, for overnight setups, I'm going to try this though. I will try it. But I personally do it differently, which I love, which is get into the secure trade and secure it and let it go, because then I can't lose. I don't have to worry about this stuff. It's like I get into a direction of the trend. I see my KPIs once it's crossed. If it's not, I'll put a pending order to when it does cross, and I'll come back later and I'll secure that trade for goal, and I'll say, go ahead and move on, right?
Yeah.
Keep going.
Well, and let's say
know?
that we can't hedge because funding pips and all this other stuff. Well, what you could do is adjust your position size down and just do what Duke asked earlier, is why not just set the hard stop loss? And you can do that. You can still put all the bells and whistles on, build into trades, set a novice, and just do a hard stop loss and not do phase 2 of the hedge. And again, I'm finding out that 8 times out of 10, price comes down, gets you in, comes down, gets you in, comes down, gets you in, goal right there. Now it can keep going, or it can keep going this way, and it doesn't matter. So if we can't, if it turns out that we can't do that, over the long haul, then yeah, we just have to decide risk versus reward. How much are we willing to risk if all
Mhm.
5 of our trades go south and hit that
I have
and
a
break
question.
break the KPI?
I have a question for you, Pete. You said if it comes down here, sorry, when it pulls back, it's gold. How many trades do you put at each of these?
I am putting 1 trade at each of these lines, and in this instance, the fibs were 10 away. So 10 away, 10 away, just by coincidence, that's what these action point price cycles were. So again, if price drops 50, which it could on a news event overnight, or it could just by doing its thing. So it could do that. I also see that the weakness in this is if we have pending and a hedge, so we get these trades on and it gets us out at goal, but then it comes all the way down and hits the new one, and then keeps going. So I see that it's not a perfect system. What I have found is by the time it went from here to here, I've already gone to sleep, and it's been 7 or 8 hours, 6 or 7 hours, and you've woken up. So I wake up in the morning and I will delete this, delete this, delete this, delete this, delete this, because price is sitting right here. And now I'm just gonna turn on the trade clock and start trading 3 and 50.
Hey,
So I'm
Pete,
sure I understand your hedge. So when you have the pending sell order, so you're doing quarter lots. So at that point, you're in what, 4 trades? Is your pending sell 1 lot?
Yeah.
Okay, got it. Thank you.
Yep. So 1, 2, 3, 4, and then this is number 5 total trades. I don't have 4 trades per layer, 4 trades per layer, just because there's no need to. You go heavier to get goal faster, with a caveat that I explained. The other thing that's kind of a wild card is these pendings up here are not factored into this sell lot, this hedge. So again, price starts here, it goes boom, boom, comes up, hits this, and then comes down. And that's worst case scenario. That's maybe a unicorn event, and that's where this 4%. So if that happens once every 90 days, and we go back to Dave's stats of, hey, so you made 20%, 20%, 20%, and you lost 4%, are you okay with that? And so again, like with our EAs, with Anubis or Talent, you've got to protect yourself ultimately from failure of the challenge. So
Pete,
thanks for letting me share that.
hey, Pete, on the limit orders that you're going to place, do you have take profits on those, or you just wake up in the morning and you just manage it in whatever profits you have when you get up or whatever?
Right. So I'll do this. I'll hit F9, which is the shortcut. So price is at 109,832. So I go F9, change that to pending. And I can never remember if it's a buy stop or a buy limit. 0.25 and then 1.0. Let's just go 1 point. I don't remember what it was. So 1.10. That's all I do. And so now it's telling you I can't enter it, which means that I gotta click buy limit, not buy stop. So
Can I share with you an easier way to do it?
Sure.
So where do you want?
So
where do you want
go
your buy
ahead.
limit? So where price is, where would you place it on the chart?
Right here.
So go up to your 1-click trading in the empty and put your volume here of wherever you want that. So you set that, whatever the volume is of your trade. So you have that set.
You talking about this?
Yep.
Yeah.
Yep.
Okay.
So you put your volume of whatever size of trade that you want to have on right here. Then you come over to the chart where you want to have it. So let's say you put it at the 50. You're going to put it at the 50 right here. Just right click. Not right click on the, got to right click on the chart. So without the line. So trading. So go to trading. And it's a buy limit if you want to put a buy there, or if you want to sell there, you'd put sell stop, right?
See?
So you just click on that, and then you can drag and drop. Now you can drag and drop that. So you don't
That
have to
is
monkey
awesome.
around with those.
Yeah,
with
that is
overtime.
that's going to save me 10 minutes, right?
Yeah, exactly. I hate they doing that. The like putting in price and all that kind of stuff. Just
But
annoying.
you don't-
That's fabulous.
But you don't take profits on those orders, right?
Right.
Pete?
So I'm not
Okay.
doing take profits because what happens is the second that they get entered, Anubis is putting the stop loss in. So that gets filled, which satisfies the itch for the prop firms. They could care less about take profits, and the take profit is going to be whatever our daily goal is. So you can
Awesome.
have a naked take profit, and then the stop loss gets filled immediately and then it gets calculated up here.
Awesome. Thanks, Pete.
Now, the only thing that I would love is because when we do an order, the stop loss is automatically 50 pips. Well, that stop loss could be right here, and that's not going to play well when it comes down here and sets a hedge, and the stop loss is there. So I don't know if Khaled is here, but I keep trying to go up to properties and find like, hey, I don't want my stop loss to be 50. I want it to be like 500, right? So what I normally do is the trade that's live, I'll go up to a larger time frame and just one click it and send that stop loss way up here in the heavens somewhere. Because it doesn't matter again, because I'm not doing a hard stop loss.
You can do it with Anubis.
Do you go to properties?
No. You see where it says take profit?
Yeah.
Instead of 0, put minus 500.
Okay.
When your take profit is negative, that's a stop loss.
Okay. And then that's not going to mess with daily goal or anything?
No.
Cool. Awesome. Hey, we learned 2 things now.
Just we're here to make you better, Pete.
We're just going to keep talking, and pretty soon trading will be free.
Automated. Just push
Yeah.
the button.
So I hope that was clear. Every night is different. Every setup is different. I have found that I have a propensity to see trades on the negative. So I'm always looking for sells. And for example, like if we were sitting right here, I would have looked at this run. I would have seen that this is a higher high and this failed to get to the higher high. So then I would have played the rest of the night in sells. But because price was here, that's a completely different story. So the things that we're learning on the 1 minute and the 5 minute, I'm using, and I think Dave probably does without thinking about it, but I'm seeing and using those things to set up a night trade.
So what would you say if somebody is going to do this without being handheld? What would you say is like the prerequisite of knowledge that they need to have before they can execute what you're talking about?
They need to be able to find support and resistance. I use the fibs for that. They've got to figure out what their risk tolerance is, because instead of 0.25, why don't you try it out on 0.05s, right? So if everything goes crazy, you're down 0.5%. You're not down 2%, right? So your risk tolerance, you got to figure out. And then your knowledge of Anubis. I'm not playing ride the wave. Dave is super comfortable with ride the wave, and I think in these outside ranges is probably the setup that we could have played but in addition to. So you remember early on when I said I had nothing to build on because we're outside range. There was no prior action points. Well, I could have set ride the wave. So on that third touch, it would have got me in the ride the wave, and that would have solved that. So support and
That's what I
resistance,
did.
risk tolerance. What else does somebody else think? What am I missing? Wake up on time. Don't sleep till noon. Kobashi.
Brandon and Eagle Trader asked about price cycles. I thought that was a good question. Do you just leave it at 6 or do you modify that?
Oh, yeah, price cycles don't matter at all. Because you don't have ride the wave on, I'm in manual mode. So this doesn't matter, that doesn't matter. And so those 2 categories don't matter because they don't come into play. They're not, it's not an auto EA trade.
It does if you have it activated. So even if you don't have, even if you're in manual mode, if you go in and put follow, they follow with the stop loss in properties, if you have those to true, then it does follow with the stop loss. So that's
Okay.
what I did last night. I had it set to 6. And so the first time it was in profit, as soon as it had a pullback, it took me out.
So I went to properties, and I do a secured trades off break line. Here's the other one you have to be at true. This is secure from lowest or highest trade. So which one did you say was true, and is mine set to false?
Well, that's both of those, and mine follows even with it in manual mode. I am using, well, no, I'm using the same version you are, 359. So not sure.
Yeah.
Maybe I have another setting different.
Mine never, because I'm in manual mode, so I don't know why why it would trigger you into a trade regardless of price cycles.
I have that happen
You set the
intermittently with
trailing.
different.
Does someone see something that I'm not seeing here? What'd you say, Duke? Trailing?
Isn't that what you said, Brandon? That it affects the trailing
It does
stop?
trail, yes, correct. Yeah,
It's not that it enters your trade, it moves your trailing stops.
correct.
See, I thought that when you click active and then it brings up the yes and no, I thought that it secures it at the percentage of the goal that you want, and that's your trailing stop. And this still doesn't come into play. Is that not, am I misinterpreting that?
That is true if it's active, if it's triggered. Like if this one is red and you reached your goal, then the trailing stop, the original trailing stop 3 players to follow will not work. This will take over. This will only take over if you reached your goal. Until you reach the 0.5%, this one doesn't mean nothing because you haven't reached your goal. Once you reach your goal, this one is at 2/3 of your goal now, and it will be a red
Right.
frame, which means now you are secured at 2/3 of your profit, and the layering of following with your stop loss no longer works. This will take over, but only
Yeah.
when it's triggered.
Okay.
Can you bring up properties again? Pete?
Yep. So it's possible that because you didn't reach goal, maybe that affected something, but where do you want to look?
So back to where you were. Let's see, I've got true, and true. Where'd it go?
Yeah, these two here, if you don't ever want them to trail stop you after like 3 layers, you turn these off, and then everything is manual. It will not do anything.
Right.
That's the same setting that I have.
All right.
So
Well,
I'm not sure why mine is trailing.
Clearly Anubis did not like you. So even
So
though
it
I
actually
click,
works
even
out
though I
very
click
good.
you all the time.
Yes. Even when he doesn't have trades on.
Yes. Slap.
Okay. Pete, did you only want your stop to be that minus 500 because you put the hedge on at the bottom?
Correct.
And once you're out of that, you'd get rid of that, right? You get
Yeah,
rid of that minus 500 stop.
Right.
I mean, once you're done with this and you're going back to normal daily, yes.
Yeah. Yep. And like I said,
if you have buy stop or sell stop, this is not a function of Anubis, and any parameter in Anubis doesn't do nothing doesn't help you. Like if you put your buy stop or sell stop, you have to do it within MT5 there. That's not an Anubis action. So the stop when it triggers, Anubis doesn't interfere. It doesn't add that stop loss to it. If you want your stop losses to be far away, regardless, then you can activate the new feature with the closeslines and place your clothesline at that 500, then everything will be then secured at 500.
Sure. So I've got to get the new Anubis, which is that
That's
dotted close.
yeah. But if you trigger buy stop, this is outside Anubis. This is MT5. It does it on its own. Anubis doesn't interfere with that.
So, there you go. Anything else? Am I done sharing screen?
Oh, you've been done a long time ago, but now you can stop.
Ah.
Hey Jeff, what did Funding Pips say? You want to just talk about that for a second?
Yeah, they said that you can't hedge.
Okay, so why does it say that you can't? Yes.
What
are they talking about that you can't do? Because on their website on strategies that you can't do, it says hedging.
Yeah, so
Restricted strategies.
Yeah, it's prefaced with you can't take advantage of MetaTrader inefficiencies.
Okay.
And hedging is one of the quote inefficiencies. And so I presented both options, like placing a pending buy and a pending sell. And they said, no, you can't do that. And then I proposed Pete's option of placing a bunch of pending buys and a pending sell. And I get into all the buys, and then the pending sell would be triggered as well. And they said, nope, you can't do that either.
So you can't do it. I thought you said you can do it.
No, you cannot.
Oh,
You cannot place a buy and sell order at the same time. And it says you cannot place a pending buy or pending sell orders at the same time.
Bunch of
Firm is that?
It's for Funding Pips, but there's other prop firm companies out there that are starting to kind of adopt that too. So just make sure you know your rules.
Have you tried placing them at different prices or different, lot sizes?
Yeah, I think that's what Eagle had explained to him was difference.
Yeah,
so
it's the act of opening or having a buy and sell on at the same time that they do not allow.
Aha.
So I guess technically if
For the same pair.
Yeah, they just say at all. You can't have a buy and sell on at the same time.
On the same pair.
Yeah, for the same pair. It would be for the same pair. But I guess what we could do is
they're fun killers, is what you're telling me.
Well, a straddle is different. No, it's not. Never mind. You can't straddle. That's
no,
hedging.
but we could.
We call it straddling and not hedging.
You could have a stop loss that you put on there, and it would just take you out of all the buys and then get you into the sell.
Which is weird, because I did straddle the other day on Monday.
I mean, it's not like it's not like anybody knows, right?
Well, I think in the rules they say well, it says will result in account termination. So I don't know.
So as soon as I ask for my first paycheck, they'll be like, "Nope, you put a straddle on."
Maybe, maybe if they caught it.
Well, again, good to know.
Exactly.
And
Tony just said the same thing.
regardless of if we need to not add in that small hedge at the bottom, then I'm still using some sort of KPI that gets broke as my end zone to protect risk. So there is a calculatable risk. But anyway, so there you go.
So question, like, let's say you put a sell on by mistake, because I've done that before. I actually did it this morning. Just want to buy and hit sell instead. Can you just like close it out immediately and justify that you clicked it by accident?
I think if it's within a certain time frame, I think most of the people will understand that, right? So, and I have to report that FTMO's customer service is really nice. I've had an issue with them, and they just came back and said, "Oh, you're right. Our bad. We'll fix it." I'm like, that never happens. That never happens when somebody says you're right.
The Funding Pip frequently asks question. that is stated, that they don't allow the hedging part of it. That's written in the FAQ.
They do or do not.
They do. It's there. I just read it. I'm gonna copy and paste so you can
So that's
see
probably
it.
why they haven't kicked me out.
And question, like sometimes when trading the news, right, you put on a buy stop and a sell stop. But what happens if it does a lightning or a heartbeat, which triggers you on both?
So, William, if that's
Yeah.
that's very confusing because if you look, you're talking at funding pips, you have to then go deeper and look at their restricted strategies. They have restricted strategies. They click on that and it specifically says hedging in there. Restricted
Yeah.
strategies that will get you banned, right?
Yeah.
So I'm just saying that I always will look at what they'll will allow and also look at what they won't allow, just on every single prop firm that you're going through, right?
They don't allow hedging at all. So
Right.
whatever.
So thanks, Pete. I appreciate it. No, really, I mean, so that's kind of what the community is all about. If you guys find something that's working for you, share it and let's adopt it, right? It's about all getting to the same goal together, taking the journey together, taking the journey to 1 million together, which hopefully you guys will embrace that, and we'll start next month on that. And it really is. It's about lifting one another up and celebrating in each other's successes. You know, Brandon had I don't know which Brandon it was, but it is one of the Brandons in our community had an awesome trading day last night. Congratulations on that lucky phone account. But I'm gonna say it really is easy to hit 30% when you're only trading like $100 account. So you need to increase your account size. So, but good
Yeah, it
job
was
on
1,700. So yeah, that's exactly the case. It was a tiny
Yeah.
account, and
It's a tiny account. So
at,
30% is still
8.05.
phenomenal. Still phenomenal, but now do that in $1 million account.
Yeah. Working on it.
Skin, you're probably too heavy. You'll be too heavy. Don't do it. Don't
Well,
don't
I-
go.
I don't understand that. 1% is 1%, or 2% is 2%. As long as your process is the same, what difference?
It's
should it make?
your risk. It's your risk when you're trading less than, I don't know what the number is. For those of you guys who have a PhD in math, and I'm not going to think about it, but at some point, 0.01 becomes too much of your leverage, right? You're leveraging too much at 0.01 when your account's too small. You're risking too much at 0.01 because you can't go smaller than that, right? So that's where that comes in. So of course you're going to make 10% because it's like you were trading a whole lot size on like a $5,000 account. We just wouldn't trade that much. So, you know what I mean? Your position size, you can't go smaller. So it's easier to lose 30%. And it's also easier to make 30% because you're trading way too much in your position size. So that's all that is.
I can confirm that that's how it works because I have a $1,500 live account with Owanda, and I have really good days. And then when it's a bad day, I lose just as much as I win, right? So
Yeah, you gotta, when you're doing small accounts, you can't look at the percentages. You gotta look at the dollar amounts, right? But then it doesn't move the needle for people. Oh, I made $5 in the account, and that's like 50% of my account. Some people will let you trade like $50 accounts. Well, $100.
Hey, on a side comment, when Duke asked that question, I was trying to kind of tease him and joke about him maybe not listening, but he actually asked a valid question, and I think my response was kind of snarky to him. So Duke, I apologize.
Wow, you never get this kind of level of communityism, of apologizing when you're wrong. I think this is a first. I'm gonna take back one of those dolls.
When you throw 100 jokes at the wall, some of them sometimes don't land, and I didn't want Duke to think I was being snarky with him. So sorry.
But did you wait until he left?
Somebody knocked me out.
Oh
and
wait,
I'm dreaming.
Wait, Duke's still
Somebody
with
knocked
us.
you out.
I thought you waited till he left and then said that.
Thanks, man.
Is Duke gone? Okay. Hey, everyone. I apologize, but don't tell him. No, but you seriously,
That's fine.
I didn't mean that to come off as snarky. I was just teasing you. And so anyway, good question. So
Let's see. So
And
there's a
just
question.
FYI for those who learn hedging, like I had learned to put on a bigger size trade. So if you have one lot buys, you're on 1.3 lot sells. So that as it goes down, your drawdown decreases. So that's what I had learned from hedging.
interesting.
McGirt, I have no idea how to pronounce that. McGirt. Post that in Trade Talk and for an analysis because it's hard to understand what you're saying without actually seeing it. But I mean, basically what I'm seeing, what you're saying is I was down 3% unrealized, made 0.75%, got out. Does that mean you did something wrong? Well, also, I wouldn't really ask the question today, right or wrong in today's market. So it's not normal market conditions, right? So it's really difficult to answer that. But as a rule of thumb in a general statement, you don't want to risk 3% to make 0.75. But if your drawdown is 3%, it's probably because it should be because the market moved against you 4 or 5 price cycles, and you should be heavy enough at the end of that price cycle to come back and make more than what you're risking. And that's the proper procedure, right? And so I don't want to really use it in terms of 3%, but it should be that you're heavier at the where price should turn. And then when it does, you put on a prove me wrong or get out for that because you're in obligation mode. So again, there's a lot to be talked about with that. So, but as a general rule of thumb, you should never risk more, but we will get in those situations. And there's nothing wrong with being in those situations, but if you find yourself in those situations often, then there's a behavior that needs to be corrected, right?